So 2024, 2025, that's what we're using. First of all, we have to get the, okay, this is the beginning of 2024. Where 2024 start from? Yeah. Okay. So we just start from here to cut it. Okay, we got it from here. Fine. Okay, so for this major reconstruction that occurred here, remember we are just like starting from the higher time frame to know what's going to happen in the lower time frame. Now this is like supposed to be a range that price would have formed, but something happened after price broke structure. This is a failed external, so it is added to this one. I told you before, a failed external is when price fails to create the complete internals inside, and then it creates like one or two, create the rest outside. If after it creates like one more, let's say it creates two inside and then it creates one more outside, fine. If it doesn't retrace to take out that one it created, and
sorry, can you turn on the demonstration too, please?
Okay, so after price, let's say for example, after price, like let's say price created one internal, let's say it created two. Some of you are counting the first low, that's not correct. After it created like two internals, okay, now the last internal it creates outside, it will only be a failed external if after it creates that internal it comes back to take out that particular internal, then that external is a failed external. But if after it creates that internal it goes ahead to create multiple internals, like keeps a swing high, create multiple internals and then break structure above, creating new valid external above, what would you say? You will say that this external is a valid external and that invalid external before will be joined down plus this internal that was here, we join down to this particular valid one, this this invalid one that I created to our inside and created one outside, because what, we do not care about this one anymore, so whatever it does is not even our business. Why? Because we now have a valid one that should indicate our change of character if it occurs. That's why we are no more bothered about this one. That's by the way. So seeing price break this high, this is a typical ranging market, though this is externally, but I'm sure internally few things must have occurred that may likely have gotten few trades from, because just inside here it's just like price taking out, for example, took out internals and then later on took out two more internals for disruption. Then we should have like one or two buys before the disruption gets taken out again, and then we now be looking forward to sell. Like everything will just be occurring inside here, but I'm sure that we should get few things to trade from there. But this is 2023, so let's just move over from this point. Now we will call this our valid external. from here down to this point. So we're following price from here, the 30 minutes time frame. Let's take okay. There's no internal here. 1, 2. And price took out the inducement. Now, for a point to be called a valid internal change of trend for an instance, price has to like take out the disruption with the body of the candle, but it can be reclaimed, but it has to be with the confirmation that I'm going to explain soon. So now we have this point here as the inducement. Okay, now there's one thing you people do not understand. If you want to reclaim a point, I told you before, when I was saying the meaning of reclamation, I explained vividly, and I told you that it has to be with little or no reaction. For example, when I said before, I said the failure of a breaker block creates a reclaim block. Now, the definition of that breaker block is price failing an order block with no significant reaction before the failure. At least if you were trying to, for example, now let us use this low as an instance. If you were trying to buy from this low, at this point you have like 1 to 2 weeks to reward. Giving an instance, at this point here you have like 1 to 2 weeks to reward. That is not a non-significant reaction. A non-significant reaction that will create that breaker block that needs to fail has to be something like a little or no reaction. At least to this point it went up here and then comes back. At least 1 to 1 weeks to reward can be taken. Like this trade maybe would have not hold. Let me take this off. Why? Would say because 1 to 1 weeks reward is not negotiable. That's not like, but like 1 to 2, this is like almost 1 to 3 before it failed. So this is like a significant reaction. Okay, so for a place to be reclaimed, the definition of reclamation is the failure of a breaker block creates a reclaimed block. Now, the breaker block is simply the failure of an order block with no significant reaction before the failure. Before the failure creates a breaker block. This is a significant reaction. Sometimes these trade holds, they are just like luck, to be honest with you. Now, price currently came to the disruption low, probably tapped on it, but this is an invalid demand zone. So it would have been best if this zone was taken out before we buy for a better trade. And our price broke structure, giving us a new internal, which makes this low our new inducement. Because why? the inducement has been taken away. It has been swept. Now the inducement is now serving like a sweep, previous inducement rather. Now fair enough, I would not want to take a continuation when price is reacting from an invalid demand zone. Why? Because it doesn't hold for long. Let's take for an instance this guy over here. Now from this point down to this point, now most of you ask me why do I put my SL at this point. Now let me explain the reason to you. What is the definition of fair value? This thing is two different pairs though, but for gold, to be honest with you, for gold, that distance between that particular for example, this is an uptrend, that particular high, that box structure in that FVG to that third candle, if price breaks below that place, that is where the invalidation has occurred. Putting SL here or here is not like something. Change the color of the cursor. How? This is what I've been using. Black. I'm recording. So now the distance between, for gold, that's why I say you can like try to backtest your pair. Can't use the normal candlestick. People have a problem. I don't want to exit this thing because I don't know if I exit this place. We have to like start looking for this point again. This is really far. As you can see, I already set this. Please, I don't want to exit this. I beg. It might just like take our time. There's no difference now. So yeah, like I said before, I said for gold, with the way I have backtested it so much, I know within myself that if gold wants to hold that particular point where that break of structure occurred, which is here, the market structure shifts in that fair value gap down to the third candle. If gold wants to invalidate this zone, simply below this, because this is where the FVG occurred. Now I told you the FVG is simply the distance between this candle and this candle. Now we have a wick that are like actually like box structure inside this point, okay, which means that what this wick now is just like price mitigating these other areas. So the place that is unmitigated is this point. Now this particular thing is based on the pair. I'm still saying it again. For example, like gold, if gold wants to hold, this is it. Like put your SL here. After this here is just like, so now we have, and I've told you before, once a particular mitigation fails, price would not want to expect the next one that forms. So we had this buy, I don't know, the sell, whatever is not doing, I don't know why. Anyway, you all can use your eyes to see the ones that are playing out or not. So let's just, I wanted to see so I can count how many weeks to reward this is. Don't know if I remove this particular replay stuff, if it's going to go out. I don't know. All of it except this is not doing, the others are doing. apart from the buy and the sell the others are doing. Anyway, so we had this movement here, but like I said before, because price tapped on this particular low, that to me is not a valid demand zone. I might not want to have a continuation model from there. As me, if we claimed this inducement, then I might just like try. Okay, so we had few reactions at that particular point of interest until price what took it out. Now, like I said before, once price takes out your point of interest, we need to see, like, after price creates a new internal, we need to see a new reaction. Some of you use the mitigation block just anywhere, just like this one failed now, like after this little reaction here, so people will see it here now and they'll start buying. It's not like that. I've corrected so many people of that before. Okay, so a new internal formed. I'm going to talk about that field external because I think most of you do not understand it. A new internal formed. We had this. Let's take from here down to this point. We take out this here. This is not a valid internal, so this is not even a field external. This is not at all. You can see that most of these are price just moving. Okay, we had a new internal. From here down to this point here, down to this point here, down to this point. So if you want to trade one pair, you have to be disciplined, but you can swap within gold and GU if you need good pairs. But if you're trading just one, you have to be really disciplined. I think last 2 weeks, it's not last week, it should be last 2 weeks, I did not trade at all throughout that week. Why? Because I did not have any setup. I told you I'm trading just good, so I actually do not want to compromise. So we have a new internal here. Hopefully when it breaks structure with the body of the candle, actually. So if it doesn't, then okay, it did not, so we did not have this last. We actually need to see price give a reaction from a zone. I'm supposed to start with confirmation and stacking before this back testing, just in case. Time. Actually, that's what I was supposed to do. Okay. Why is this very slow? Also, if once I make like the correction on that mitigation block on a failed disruption, I will stop the backtesting and just teach the confirmation and stacking, so that in case we don't have time, we know that we actually did.
If you want to move faster, you can tweak the settings.
No, that I think that's the fastest now. Because this is now 10x. This is like the fast, or is it not? I think it is. X can do 20x or more. Way. I think I have to like just teach that stacking because that's really important. That's the reason why we're here. But I need to like look for a zone first. Let me just get one entry. Yeah. Yes, I know. He said, can we just like leave the back testing and focus on the current price action with the current structure so we can do the confirmation and stacking? That's actually what is on my mind right now. Because so you can just like understand, because that's the main reason why we are here. That's the main reason why we are here. So we're going to use the recent price action for the previous trade people have taken. Now there are two different ways you can stack and get confirmation. There are three ways you can stack, and there are different ways you can have confirmation. Depends on the entry model. There's candlestick confirmation based on the reaction of price at your point of interest, and there is normal confirmation, which is like, for example, let's say that we have, let's say this is disruption. This point is disruption. For example, this point here is disruption. Now if price takes out this disruption with the body of the candle, now I already told you from the beginning of the class that anything that has to do with the body of the candle is just like price has changed character. Okay, it's just like price has changed character. I hope you can hear me. Just like price has changed character.
Yeah, I can hear you.
Okay, and so if price takes this point, which is the disruption low, with the body of the candle, now you need a confirmation to be able to reclaim this particular zone. You need a confirmation to be able to reclaim this particular zone. For example, now let's say that before price took out this disruption, this low, price gave something like this before taking out this zone. Now if it takes out this zone with the body of the candle and it creates mitigation block at this point, your first confirmation to buy is if this mitigation block fails. And when this mitigation block fails, now if you're using 30 minutes time frame, be careful. Check the 1 hour time frame. If it doesn't have the mitigation block, because if you have mitigation block on the 30 minutes and you still have on the 1 hour, that 1 hour has to fail first, because something like that happened on VIX. I think jump 25 or VIX 25, something like that. So the 30 minutes on hit SL, but the 1 hour on was bigger. So what happened? He used the 1 hour on to like sell. So the confirmation is check both 30 minutes and 1 hour. Allow both of them if you want to actually reclaim that zone. But if a particular entry is showing on both 30 minutes and 1 hour, like the same point of interest is showing for the two, you can take 1 hour preferably. Or if 30 minutes is before the 1 hour, you can take 30 minutes and stay there. If 30 minutes fails, let it be, just watch the 1 hour, do not enter. Now if this is the mitigation block that was created here, now that mitigation block has to fail. That mitigation block that failed, if it broke structure like this, then you have a confirmation for a buy. Now then, if it is not a mitigation block that was created, it's just a normal break or structure that occurred just before the failure, that's why it has to be like little or no reaction for it to be reclaimed. Now your confirmation will be price breaking this high, most especially when price took out your disruption with the body of the candle, because that's like we are supposed to be selling, not buying. But because price did not create any sell point of interest, it should break structure above like this before you try to buy from here. Okay, now before you try to buy from here, price needs to break structure above. Then this particular low, so for some people that are asking what is last point of true mitigation, last point of true mitigation is simply a point that invalidates your whole setup. For example, if you want to buy just like this setup is now, your last point of true mitigation is the particular entry that invalidates. Let's say you are on the buy side, you don't have so much capital, so what you have to allow, and you know that yes, price is supposed to buy, but it created mitigation block. You created mitigation block before breaking that low, and price did not create any entry for you to sell. Now your last point of true mitigation will be price failing that particular mitigation block before you enter, which means that what if your entry fails, you know your SL has to be below the protected low. If your entry fails, your last point of true mitigation has failed. It means that what a sell has to continue. This becomes what the inducement. Okay, I will still come back to that. Let's use the previous price, the recent price action of gold to get few confirmations that we must have seen, maybe neglected because we are not aware. Now we have the confirmation that has to do with candlestick. I'm going to drop it in, where should I drop it now? Okay, I'll just drop it in this material for advance. Okay, let me drop it now. There are actually too many though. I'm going to like confirmation candlestick. Those are few confirmations that you will see They are loading. You just check the materials for advance. Few confirmations that you see, and you cannot use structural liquidity as reclamation until price has taken out a particular zone. That structural liquidity is just like a re-entry. It's not like a major entry. It's not a major entry. Price has to be coming from somewhere first. Last week, most of you were confused. I think there was a very small internal that most of you did not know. That was internal. And by the way, I've dropped the confirmation candlestick there. So now, how do we use it? Just check the material for advance so that you can be following up with what I'm explaining. Now, how do you use it? Now, let's say you have a point of interest. Let's use one of them. The best here is if you're buying, the best is like inverted hammer. Yes, I don't really make use of them that much though, because I don't trade directly at a point of interest. All this one involves you trading directly at a point of interest. My best entry model is price taking out a point of interest before I enter. So now this particular one has to do with somebody with better let's say better capital. So because when price closes, you have to wait. For example, you're using 30 minutes time frame, you have to wait for that. This is let me draw the inverted hammer. There have to be a rejection like this in your entry before you enter. Like you have to wait for, let's say this is your zone you want to enter from. You have to wait for price to close like this. When price close, then you now enter from the next candle and still maintain this SL. But you need to see, you know what this thing means? Just like a rejection. A rejection or best for buys, something like this as well. This is a hammer. What does this indicate? That price, that like price pushing like sellers above. There was a selling pressure, you know, before price will create candlestick like this. The candles must have gotten to this point initially. The time frame to use is the particular time frame that you are entering from. The time frame you analyze it, for example, like 30 minutes. When you see this, you're not entering directly. You have to see this thing in your point of interest. It's already written there. The ones for bullish reversal, bullish continuation, bearish reversal, bearish continuation, bullish engulfing. That's the next one I'm going to explain because it's more like the one I use as well. So like the lower time frame, I used this one before now. For example, let me still stay here. Let me leave this. Let me just draw a new one. And this one is used in the 5-minute time frame. You have this point of interest. Now price has to create, because you are buying, price has to create a bullish engulfing candle inside your point of interest before you enter your buy. Inside your point of interest, like maybe inside the SL or something. How is it? They have to be the first candle, and then the next candle closes below the first candle. Closes below the first candle, and the next candle closes above. Okay, this confirmation, I actually use this one. This one has to occur inside your SL. That's your point of interest. Has to occur inside there. If it's occurring outside, or price have not tapped here and it occur here, it's not correct. It has to occur inside. This one is this one that is written bullish engulfing, because this is for buys. The first candle, the second candle has to close below the first candle, and the third candle has to close above the second candle that closed below this one. Then where is your confirmation entry? It is this particular one. Now you can decide to buy directly as soon as this third candle closes above. The next candle that is forming is your entry, and then you're maintaining this stop loss. Now, why is this confirmation important? For those with little capitals, this can help you. If you see it, like in the 5-minute time frame, for example, you see something like this, it's an indication for like a reversal. Price wants to start. If it's inside your SL, price wants to start going up again. There are some confirmation candlestick I see inside SL, and I just know that price might not continue on that particular trend I expect it to go. It's written there, the reversals, the continuation. This one is, I don't take entries. See, let me explain something that people don't understand. If this is my point of interest, even if it's a valid demand, I do not enter directly. I trade the same thing you trade. I might just wait for price to take out that point of interest first, then I can reclaim it. Or if that is a valid demand, then price should tap on it and then break structure. Then I enter with the continuation structural liquidity for reclamation like this. Then I continue with mitigation block. But I will never enter directly from that particular point of interest, even if it is a valid demand or supply. Entry directly is like you are trading SBI, because there are some qualifications. I already gave you guys the qualifications of a valid demand and supply. They hardly meet this criteria, so I don't risk it. Price always takes out this point of interest before going to that direction, so I don't even bother myself. But if that particular point of interest is a valid demand or supply, fine. If it taps on it and it doesn't take it out, then I can follow up with a continuation entry model. But in a case where price takes out, I'm recording. In a case where price takes out a zone, like with reclamation, and then inside that reclamation, for example, like this, now you see mitigation block here, and then you see reclamation, please, it's just best to use the reclamation. Reclamation to reclamation is better than reclamation for mitigation when there is reclamation re-entry. This guy might fail and this guy will hold. So I was talking about the bullish engulfing confirmation. Now this one happens in lower time frame. When you have your point of interest already, then price is in your SL for those that want to stack. Okay, for those that want to stack, price will get into your SL, create this particular bullish engulfing candle, the first candle there, the next candle closes below it, and the next candle closes above it. Now when the next candle closes above it, your entry can be directly as soon as that next candle closes, but still maintaining the SL. This gives you opportunity for some drawdown, okay, and it also gives you opportunity to like leverage the buy more. So when it gives this confirmation, you can enter positions from here with this SL. You know, it has reduced the risk from here directly to wherever. It now give you from here to here instead. Okay, now another way you can stack, I might not be showing all of them in the chat because I don't know, this thing is like, to load is a problem. Okay, thank you. I just need like a trade people have taken before. Wanted to explain with like a trade that you have taken before. Okay. I don't know about this. I don't know if this is valid, like based on the structure or something, but this is a mitigation look, and that's correct. Like 5 minute time frame. Okay. Let's see if we got like the bullish engulfing candle confirmation here. I've told you what last point of tool mitigation is. Okay, I think we had something similar to that here. Now we had this hammer candlestick, this one here. Can see after price created this, if your point of interest is valid and price doesn't want to like take everybody out, like there are some losses that are just normal. Now like after this, you can see this like a reversal that's giving like a sign that price wants to buy. Now the bullish engulfing now comes in when the next candle closes above, the next one closes below this one, the next one closes above, then your entry will be this candle here. Over here you can see price tapped on it, and if you see more that still occur inside here, you would open more positions using that. This particular one closed below this one, next one closed above, but price snubbed it. This would have been another entry. Aside inside or SL, anything outside is gone. I cannot take like to like stack or something, though some people still take it when they still see it. Like this one now, this one closed below, this one closed. I don't personally, I don't. once it like, because when you leverage this is like DCA, dollar cost average, when price like retracing inside your SL, you're opening positions inside there. There's difference between this thing you took here, because if you take entry here, you're still going to use the normal SL, so it's your own, you're having more risk. Okay, you're having more risk. But if you have this confirmation inside here, you have one here, you have another one, you could follow up like that if your point of interest is actually correct. Just too many problems. People are complaining about the candlestick. This thing now, I have to like leave here entirely and come back again. So I leave here and come back again. Then we set the price.
Is the settings not showing up? Do you need to reset everything?
Do I need to do what?
I think you can change it without. You want to change the candle colors, right?
Yeah, I've changed it already, but it's showing in my phone, not here.
Oh, okay. Then just, I think there should be a way to load layout or something like that, like to refresh the page.
That's if it works. The same thing.
Not like refreshing your browser, like within Trading View. I just don't know where exactly it is on the PC. But there should be an option to load layouts.
Okay.
No, check the what's it called? The icons. Okay, you've had it. Alright.
This is really, really ugly. I have to like apply default to all of them now. Because the lines are showing black.
Change the background to white.
I hope it's better now. Okay, so like as we were saying before, I think I've shown you the example of the major confirmation that my other student use is, it's actually called single candle order block, but I don't like to personalize it. It's just an engulfing candle. That's just it, an engulfing candle. It's in that place, that candlestick stuff I sent is there, all of it. There are some of the ones that I will not explain here, but I just like take our time. So we have this one, the hammer. We saw it in the lower time frame. It's an indication for a potential reversal. For example, price is going down your SL, and then you see it push like this and it closes like this. You have to maintain the initial SL. Yes, the only thing is that it occurred inside your SL, so it gave you a bit drawdown below, like something in your favor, something in your favor. Like if you're entering after this closes, the next candle will form from here. So from here to here is better than here to here. Then you could see the single candle order block, which is the engulfing candle. The buys, it looks like this. The first candle here, you have to look for this one in the lower time frame, the 5 minutes, when prices are stuck on your point of interest. For those that have little capital, you don't enter immediately. You don't, and make sure your analysis is correct, because if your analysis is not correct, this thing will not work. It will be like a waste of time. The next candle have to close below the previous one, and then the next one close above like this. When this occurs, this guy here is now your single candle order block. So you can decide to enter directly from here. It has to occur inside your SL, not outside though, inside here. Your SL, you're going to maintain the initial SL. For example, it happened here. This is your SL. This part, mitigation block, I don't know, I don't use confirmation for mitigation block. I actually do not see need for that, because mitigation block is very precise. No much drawdown for a trader hold for mitigation block. If you want to fail, it will fail, but you can still use it. This one is people that like entering directly from the point of interest, and they will have some drawdown. So now this, you can enter directly after the third candle closes, or you can enter just like this, allow price to come into it. With that point of interest we hold initially, then this just gave you like an advantage to leverage the little drawdown that occurred inside your SL. So many times it has happened in gold. From the 5 minute time frame, that's where you check this confirmation candle. Yes, stacking is done from the lower time frame. Then after you must have gotten some profit, you can still use somebody dropped an example. Let me pin it. This is an example of the single candle order block by both buy and sell. It did for both buy and sell. So this is an engulfing candle. This adding to the other ones I dropped there. You have to see them inside your SL. Then for those that are using like higher time frame that want confirmation, the only risk there is that it's actually a typical waste of time. Why do I say so? Now if this is 1 hour time frame and you want confirmation before you enter from your initial time frame, then it means that you have to wait for price to close here, and if price is closing here, this is now your new entry, this point, and your SL is now from here to here. So instead, all these journals that occurred inside here, a single candle order block, are formed at this reversal. It happens at the reversal, or you see like an inverted hammer, or just like a hammer like this. This is how hammer looks like. Everybody know what is hammer. Like the last point where price pushed up, it has to remain like the rest should be like a week ahead, exactly like this. It has to be like a week. This thing have to occur inside reclamation. Reclamation is good, yes, but reclamation can also have drawdowns as well. So a confirmation can still be used in your reclamation regardless. You can use this confirmation anywhere. It can still be used when price is reclaiming your zone. It can still be used there because sometimes when you reclaim a zone, you have few drawdowns. Let's check. um I said I don't trade directly at the point of interest. I'm not talking about mitigation block. Oh. Who doesn't trade directly at mitigation block? Who doesn't trade directly at mitigation block? I'm talking about like disruption and likes. That's what I'm talking about. I'm not talking about that one. No. I'm looking for like a point of interest to like give an example from. Okay, let's use this one. In everything I've taught you, just like follow up with what works better with. Can we call this single candle order block scope a valid pullback? No. It's not a valid pullback. A valid pullback is different. A valid pullback has to do with FVG. It has to do with FVG. When this candle closes below the previous candle, the next one has to like, there have to be a gap between this and this. This one is not like, this one has to do with just, this one is pullback is 1 2 3 4, but this one is just 3. The candle that is on its own, the one that closes below the one on its own, and the next one that closes above this one that closes below this one. Simple. The other one is has to do with 4. I was trying to give an example. An example here. Okay, we had. Now, most people were asking about this. What's the name? Field external stuff I talked about. Okay, let me explain it to you. Now, I said it before that a valid internal must have structural liquidity. Now, a structural liquidity that has structural liquidity is an internal. A point cannot be an internal if it doesn't have a structural liquidity. Now, remember gold sometime last month where all of you reclaimed this point of interest. This point of interest here. What you're supposed to ask yourself is, why did we reclaim these points if we all can say that from here down to this point is one leg? Like, why do we reclaim this point? Now, the reason is because this guy has a structural liquidity, which means that what can go for a buy. Number one. And it's like a field external. Not even like it's a field external. Price actually wanted to create an external, but ended up creating just 2 internals inside. 1 2. I told you, if this would have been a valid external, then price should have not taken out this last internal it created. Instead, it should create one other internal outside, then create more like something like this, then create more internals that makes this point a valid external, and then we forget about these people. But it did not happen like that. Now price took out this guy, this is a valid internal, and then reclaimed it. Now from this point to this point, even if you don't, whether you have an entry for reclamation or not, so whether price moves in that point of interest, even if it's an inducement and it gives at least 1 to 2 weeks reward, is no more non-significant. It is significant. We have seen it that something happened there was a reaction. If it was 1 to 1, price did at this point and it came back, we can reclaim this. But what happened? Price actually gave like, I don't know where somebody else will be, but this up to like almost 1 to 3. So there is no point trying to reclaim this point. There are some persons that will send their trade to me. I usually tell you that your point of interest has been mitigated before. That means that what you did not get an entry, but that particular place you're trying to reclaim, price has gone past. Like price has moved with that liquidity that was in that point. The only thing is that you did not get an entry. So a failed external is when price creates internals but they are not up to 3. 2 internals that are valid that are inside this external, you will count the 2 internals complete. You count the 2 of them complete. Now after price swept this, it created a new internal over here. Now this new internal got swept again, but this time price took it out. But before price swept it, this particular internal had something like a zone to look out for, which is this last bearish candle before this series of bullish candle, which this reclamation occurred from. After it took it out and then it bought. If you were using structural liquidity re-entry, then this can be your re-entry from here, but still maintain this stop loss. When you see re-entries, they might not be your initial entry, they can just be continuation for you to open more positions, but you already have an initial, and that's why I talk about having like price has to come from a particular zone. Because if you're using continuation model, it means that whether you were there when price tapped on the initial entry or not, we are all assuming that price came from a zone where people have entered before, and then these your continuation entries are just re-entries that they are using to open more positions with stop loss. Now another way you can stack is you have your initial entry. Those mitigation blocks are also points where you can open positions to stack. But before you use mitigations block as a re-entry for stacking, you must have an initial entry that, let's say you have $10, you must have an initial entry that has already given you profit that you are using to open your continuation. Okay, like you're using to open your continuation, which means that that particular continuation you're opening, you are using the profit from the initial zone. That's why I always say, where is price coming from? Because you cannot just, because you saw reclamation, a mitigation, you just want to follow up. No, you have to know where price is coming from, because these mitigations, they also get exhausted, and people will take profits after once one mitigation block fails. People that have initial entry since that particular failure, they have taken one loss there, they will have to close other trade, because the reversal might be coming back to their entry to create a new internal, so there is no need holding that particular trade anymore. But if you have a particular zone that you are buying from, you keep opening positions at your re-entries, fine, you keep opening till one fails. Once one fails, the chances that price will come back to your initial entry is very very large. Why? Because that your initial entry, price might come there to form. Even when mitigation block fails, it's creating new internals. Now somebody said, I don't understand what you mean by non-negligible reaction. A reaction that is not noticeable, something that is not significant. Once a trade gives you 1 to 2 weeks to reward, that is a significant move it has given. That's not what I'm talking about. To reclaim a zone, it shouldn't give you a good reaction before the failure. Like same price has moved. Just imagine all this movement that price has done here now, and then it closes below here, and then it's now coming above you now from nowhere. Say you want to reclaim this. How? This is enough profit for people to go out. You know why I said that is because now people have taken profit. If the reaction is a significant one, it means that people have taken profit. So when price coming, it's coming to sweep everybody, especially when you are buying at the inducement, like trying to reclaim the inducement. Now based on this top down analysis, I'm going to drop a I'm supposed to even drop these things. I'm going to drop a step by step on how you can take your trades on or before tomorrow ends. I'm going to drop step by step how to take your trades, how to analyze from the higher time frame, and please note that that is based on the particular pair you are trading. So it will be written there that when you get to the entry point, it's based on the pair and the entry model it respects. What is weak rejection? Now lastly, let me just like use this to also talk about this weak rejection. Now I talked about something like engineered liquidity, like price almost getting to your point of interest, and then what happens? It like rejects like this. Now this particular confirmation candle, let's say you are buying, this hammer is a weak rejection in the point of interest. I don't know if you did like basic market structure elsewhere like before. Now you already know there's one thing they were using like to make us understand very well. So it wasn't like maybe sarcasm or something. It was like something they used to joke with. They will tell you that bulls and bears are fighting who to win. So the confirmation is, if bulls can try their best, if bulls and bears are fighting, let's say this 30 minutes time frame, what you see is this candle go up, comes down, goes up, come down, then they say bulls and bears are fighting. So if you need confirmation who will win and the trade that we hold, bulls have to push it up like this to make sure that they push their candle above, and there is a rejection with the wick. It means that what bulls have won, they actually pushed price above and they closed above. But if bears are winning, then you see something like this instead, your point of interest. This is part of the confirmation you can find inside your entry. Confirmations have to be inside your point of interest. Okay. This step by step is for both synthetic and forex. It's just a method which you can approach the market each time you are trading a new pair. It's nothing difficult. Engineered liquidity does not occur when price internal doesn't have structural liquidity. No. Engineered liquidity occurs majorly when you are trying to buy from an inducement, which is very risky. So price have to like create something that will act as that inducement for inducement. It has to create something that should act like that inducement. Like there should be a liquidity there that price have to sweep. You know that when price is coming to your point of interest and it rejects, you see something like this. This is your point of interest here. I see something like this happen here. As soon as this thing close, there are thousands of people that will start to FOMO to enter here. So this is an engineered liquidity for people that are impatient. It has to be a very long week, like it rejects, like it wants to actually buy, but you are certain that that is not your point of interest. It's even going to be like a confirmation for them, but you know price has, that's why I said these confirmations have to happen inside your point of interest. Because if you see this thing close to your point of interest, this is an engineered liquidity. Now price will sweep them out, everybody that entered. Okay, this happen most times when people are trying to buy directly from the inducement and price like trying to give like a fake out. When a zone is invalidated, what does it mean? It simply means that price have, let me just use you've taken a loss. Let's assume you're trading from that particular point of interest. And invalidation means that zone is no longer safe to buy again. Price has taken out that particular zone. It has invalidated it. Is no more good to buy or sell from that particular place. Is not a safe place to buy or sell. How do you manage a mitigation block entry for 5 weeks to reward, and how do you secure your win? It's very easy. I've told people before. Once price enter 1 to 3 weeks to reward, okay, once price enters 1 to 3 weeks to reward, as soon as it's coming back to your entry, it's going to hit your L. That's the truth. After 1 to 3, it's going to hit your L. If it's coming back to your entry, the chances are very slim. Okay, the chances are very slim. It's actually like if you're going for 1 to 5, then it's, if you check gold throughout last year and this year, anytime gold gets to 1 to 3 and it's coming back to the entry after reaching like 1 to 3 reward, is coming back to take that mitigation block. Is there anything like a single candle mitigation? Single candle order block, single candle, that's that bullish engulfing stuff I drew now. That's single candle order block. That single candle order block is not this thing I drew here. That's single candle order block. When price mitigates it, is price coming back to tap on it. How do you know whether a zone has been mitigated by a single candlestick? It's simple now. If you're looking forward to stack from this place and this single candle order block appears here, and you did not see it on time, and another candle has tapped on it and price has started moving, this has been mitigated. Now mitigation is simply when price has tapped on something you want to use, it has already been used. Because I've told you before, whether you get an entry or not, if a point of interest is like has been mitigated, especially for reclamation, if price takes out this point of interest and it doesn't retrace back to the protected low, instead it keeps going, that particular point of interest has been mitigated. It doesn't even need to come back for it again. If it comes back for it, it's coming back to take it out, because the definition of this reclamation is the failure of a breaker block, and breaker block is taking this thing out without a significant reaction. Because once there is a significant reaction, that point of interest is gone. It has been mitigated. Okay. How do we get our entry from POI? Is it the basic last bullish candle before the bearish move for sell and the opposite for buy. I said in some cases you can use the week. I've said it before, I do not enter directly, okay, because if you check your chart and you're being honest with yourself, majority of the zones that so many people enter directly from, price take them out before they move. Okay, so to me there is no such thing as entering at the last bearish candle or last bullish candle. You can only reclaim a zone after it has been taken out. Stacking has to be done inside your initial entry, except if you have gotten an entry before. And then you're like, let's say for example gold, you have gotten like a mitigation entry before, and lucky you, price moves forward a bit and then creates another mitigation block. Now what you do is you are now risking your profit for this, maintaining this SL. Yeah, this your previous entry here, your SL has to be below, like break even has to be below. Just like if this is the mitigation FVG here and this is where you want to enter from, this your initial entry, your first entry, your SL can be here, because the truth of everything is if this one fails, price coming back to clear you here. So your SL like break even has to be here, and then your next entry, you're risking the profit you've gotten from this one to open the next position. That's another way you can stack reasonably. Don't just open position. So that one can be done inside your SL. Your SL. You can see the reversal candlestick when price is reversing, and take advantage of the reversal when it shows those candlestick inside your SL. Spell will save the confirmation candlestick ad. You create a group and you send it there. You can go there to save it. For those that
instead of creating another group, you can just send it to the wallpaper group.
To where? The wallpaper group.
The wallpaper group. Yeah.
Okay. I already posted that wallpaper group on my status some time ago, because some people were requesting for culture wallpaper. No, it's fine.
No, it's fine.
That'll be like maybe after the class. Yes, somebody asked, so we need to know the pair we are trading very well to know if you can reclaim inducement or disruption. Of course, that's why you need to. I gave example with I was talking about relationship. I told you, for you to like make your relationship work, you need to study the person you're dating. Okay, know what they like, what they do not like. You need to know everything about them for it to work. So even it's applicable here, because you taught too many entries, and then not all pairs want to be reclaimed at inducement, and most of these pairs move very slow. So a pair that moves very slow, mitigation block cannot work there. Why? Because mitigation block is just like the other time my boss was like saying it's called tap and go. So if the pair is slow, how does it tap and go? It's going to like look for liquidity to even move, because mitigation block already there's price has engineered something like taking out a zone or something. So how does it tap and go if there is no liquidity for it to move? You just use you as liquidity. Okay, you just use. How do we stack? What's this? What did you write? How do we stack a egg? What's egg? With margin and all. I don't know what you're talking about. Yeah, for those that have extremely low margin, like 1 minute, $1, $2, look for pairs that actually need very low margin to open them. like VIX 75 1x, spend like some days to understand the entry model you expect. Then when price comes into your entry model, your last point of true mitigation should be your confirmation. Allow price to enter into that SL first, then give this confirmation single candle order block, then enter from there. If that happens, you have successfully saved yourself the drawdown that would have occurred at the entry. It cannot occur from here down to this point that you will not be taking, because if you have like $1 $2 from year to year, price might not even get your SL before you are out. So you need to enter inside from the SL, but you cannot just enter randomly. We need to see like a reversal for you to enter. When that reversal happens, then you can enter and then maintain the SL. By that time, now from year to year, now we'll now be giving you like probably like $0.50 or something. Then you want to open more positions, allow price to at least move first without your $1. Give it some space. Not like you have $1, only you have open here. No. You have to like allow price move for a while. After price have moved, at least your $1 is in like $5. Then you can go back now to look for another zone again in the higher time frame. You do the same thing. Allow price to give that lower time frame confirmation. You enter again from there. You don't enter directly because you know that you are using a low capital. So you allow price again to like give you a confirmation again in your re-entry. You keep using confirmation because any little once one hits SL, just close all your trade because it's coming down. Especially if you are using mitigation block, it's coming down. So
Sorry, please, you can pause the questions and resume the teaching. Then you can come back to the question.
no, I actually used the equation to teach. I just wanted them to ask where they're having issue.
Oh,
Where they
okay.
are having issue.
Mitigation block, in the case where we have one or more FVG immediately before the mitigation block, how should we set our SL? Price tends to fill FVGs. I don't understand that question. I don't understand that question. I don't understand that question. So we have to stop here. This is almost 2 hours. If you can drop a chart example of what you're talking about before you round up so that I can check it. You can just drop like a chart example. So currently on gold, price is currently at our external. This is a valid external. It created valid internals before, I guess. Let's check. This is a big break, so initially where this break now occur is here. An inducement, obviously. So no matter how small it is, it's an inducement. Created this structural people that are just coming and talking about last point of true mitigation, just watch the video. We already done that. So let's check 1 2 3. This is an inducement here that was reclaimed. This guy here, an inducement. It was reclaimed. Many of you don't know this is an inducement. Once he has structural liquidity inside itself, the structural liquidity dua doesn't matter anymore. So apparently the price action for good. Okay, there was no entry here. It was on the week. So the last structure internal that was created is this guy. Okay, then the next guy that was created, now the mistake most of you made is, to you felt like this is the what's the name, disruption, and that's wrong. This is actually the disruption. So we had the reaction from this guy, the inducement. We had the reaction from here first, and then price took it out. Took both guys out plus the disruption, and then reacted from the internal liquidity. So the internal liquidity, just like traditional liquidity as well, they are in charge of reversal for continuation, like what happened here. The price created this this, we have this. Alright, fair enough. Price created this is in the week of the candle. This is inside the LVG here. It created this before it failed, which makes here what, mitigation block. And I told you, before you can reclaim a zone that was taken out with the body, that particular mitigation block has to fail. But let's be realistic. If this mitigation block fails, with what I explained to you, this is your protected low. How do you reclaim from here down to this point? Because I don't know how many weeks reward you'll be targeting, if, because there's no how you can reclaim, because this is where your entry will be. From here down to this point is like $50 on lowest lot. Like putting your SL here is not actually worth it. Why? The reason is because, though if this was like something small, yeah, it could be reclaimed, because what, a sell POI failed, obviously, but this cannot be reclaimed. Look at where the protected low is. What are you risking? So majorly the L you should have is this sell from here. And then what, price broke structure again. I think this is where the break structure is. Now the only thing I want to warn the people about, right, when price when market opens is that this particular point that price is now, you have to be careful from, because I know everybody, all eyes, because the truth is from this point here is a point of interest. This is the last break of structure that occurred here before price started going up. This point is a point of interest. So if you are selling from here, just don't risk too much, because I know a lot of people want to sell from this mitigation block here. Fine, the price is not coming from any good zone at all. Everything here is just like nonsense. The whole good things that occur are just like back. So you just have to be careful, because what price has tapped into an external. So price has tapped into an external, and if you are selling from here, I don't know if I've said it before, if you have a sell POI and you have an external just close by, if price taps in that external first before your sell POI, you might want to cancel your sell POI, because that external is like, especially if it's a strong low, it will be coming with force that a mitigation block might not be able to hold. For the person asking the question on BTC, the also can be just above that particular, okay, I've seen the chart example you drop. The also should be above this. I don't know how BTC does for mitigation block, but let your SL just be, how do I color this now? Let me just try to check it from here, because I just hope people are doing the right thing. Like the structure of what you marked is correct. That's what I mean. But let me just answer your question. Might take me some time to check that pair again. If it was good, this is my entry, and my SL is just above here. That's all. But I don't know this pair, what it does at mitigation. But to be safe, just put your SL here and just target 1 to 3. Because the SL is already big, 1 to 3 is okay. If the SL was small, then it would have been 1 to 5. But after 1 to 3, this price, the way I'm seeing, can be exhausted. I want to check previous price action. But be sure you're supposed to sell though. Somebody said I funded $3 and entered VIX trade with the least lot size for that pair, and I had a drawdown on the trade and it blew my account. Although the trade went to my TP. My question: how do people with $2 accounts? I'm not sure this person was here since, so I'm not sure. If you were here, you're supposed to see where I mentioned entering by confirmation inside your SL. If the pair had little drawdown, that drawdown, when did you take that trade? Because I'm sure there would have been like a reversal sign. That would have been where your entry starting from. You with $3, what are you entering directly at the entry for? Nobody enters directly from the entry on $3. The person that is trying to buy gold, well, I think Steven has dropped this after 11. Started since 9. Steven has dropped the pairs and their margin, like less volatile and the rest. So just have to check it. We have to stop here. What happened to gold? People say see gold. See, we were not even able to take 2 because only one is taking 2 hours. We all sleep here. Is this is different? How many this person own gold as broken that low, and this one is still here. That person own his own gold has broken this low. If gold break this low, fine, just keep selling. So we have to stop here. There's an example of continuation entry happening now on VIX 75. Okay, that's fine. Like I've said it, let me give you a quick recap. For those with low capital, do not enter a trade directly at that point of interest. Okay, it's very simple. Allow price to roam about inside your SL. Then use either of the confirmation candle, most especially the single candle order block formation. Even if you want to open more positions to stack, make sure that they are actually confirming, like they are actually continuation entry in the higher time frame normally. Then but you are even if your account has grown to, like, maybe you entered with like $2, you have gotten like $20 from initial entry before you got a confirmation, a re-entry, fine. You can decide to open the re-entry, enter with risks like $5 to $8, then still use the same confirmation so that you can have chance to open more inside the drawdown. There's advantage when you open at the drawdown. Okay, that's on that. So see you in the next end of month section. At every entry, how many positions do we open based on your risk and how much you want to? If you want to risk all the profit you've got it from the initial entry, it's left for you, but that's not advisable. At least you should have few stores for yourself. This is 11:11, so we have to end the class now. I'm still going to be answering your question every time. I'm not leaving you because the class has ended. Doesn't mean that mentorship have ended. No, I'm not leaving you. I'm still here with you to continue to guide you. By May, we are going to check the people that have not gotten any results, no improvements or nothing. Then we carry them up from there. The top down analysis, I'm going to drop a step-by-step approach. The question and answer: yes, we still will open after today. It will. Why not? It will. To be open continuously until the mentorship ends. Will there be live question section on this topic? No, there will not be. We have ended our course for TLS 1.0 and I wish you good luck. In case where they are moved down, one FG plus MSS, which one is valid when they are moved down one? What do you mean? Actually, the most recent is valid. I don't understand what that means, but whenever you see 2, 3, or one or more mitigation block entry, the most recent is the valid one. I just said it now. The class for slow learners. I just said it. Bye. I just said it. What? The low on gold, 4 hours external on gold I'm taking out. Why is it not showing here? It's not showing here. Oh, this is completely different. On this 8 cap, you can see what's showing. It has not taken it out yet. This is the week to take it out. So guys, God help you all. And I wish you well, and I always put you in my prayers. I need so many results. My July people, I'm very impressed with them. They gave me results that people were even shouting. I cannot count how many of them bought cars. So please, a lot of them bought cars from July class. I want to see that kind of result here. If I was another class and those people do better than this class, I'll be very, very, very much disappointed. What's the appreciation of TLS? Is trade like Sabi girl? Trade. What's appreciation? Like, you mean the meaning of the abbreviation? Trade like Sabi girl. So please help yourself. I'll also be here to guide you every time. I am not leaving you to go on your own. I'm still your mentor and I will guide you throughout your journey for the agreed time. So God help all of you and take care. Bye.